Great. So, welcome everyone. Thank you for coming to this fifth and final meeting. As always, okay, yes. I will start with a joke. I'm not going to make it bigger. Actually, I don't have Bloomberg open, but if we need, I will open it. But I won't make it bigger because then, I get weird things. So I'll start with a joke. The joke today is about the sound system company Bose, kind of the Bluetooth headphones and speakers and all of that company. And the joke is I made a £1,000 investment in Bose today. My accountant said that it will be a sound investment. Anyway, let's carry on. Right, I wanted to know a bit more about this. I've been doing this for 4 years now. In my first year, I was like you, so I was like an analyst. But then second, third, and fourth year, I was, let's say, sector head or portfolio manager. So I wanted to know what made you take part in this competition? And what were you looking for? Who wants to start?
This is my master's here in finance and investment, but my undergrad is in maths, pure maths. So
both in Leeds?
No, outside.
Okay.
The UK. I'm from India, so that's where I did my undergrad.
And you did pure maths?
Yeah, it was called maths, but it had a lot of pure maths.
Okay. So very similar to me. Yeah, cool.
It was only in my final year that I did a bit of applied, like finance, mathematical finance, but still it was mostly pure maths. So this is my first proper finance degree. So whatever I basically knew was more of like I had a lot of not a lot, but a bit of theoretical knowledge, and that is what I've been developing in this degree as well. So basically, just to increase my commercial awareness, that is what made me sign up. And sort of to see how everything works. So yeah, that is what it is.
Very good. How about you, Oliver?
Because I want to know more about other business fields, because in my master course we don't have we nearly don't have the financial class, and but I heard many people very care about the investment on stock market. So I want to also want to understand about it. Yeah.
Very good. Actually, I've always thought that these kind of things are very good because you kind of learn from the real world and real markets and how real money works, rather than what you can find in a book or a module. So, yeah, very good. I like that commercial awareness. So nothing about, for example, making money or meeting new people with same interests, or looking for, actually, I would say that more for LUUTIS in general rather than this competition. But anything about how to make real money? For example, were you interested or are you interested in that? Because it's funny that we are working with, let's say, fake money, but very rarely people ask how you can make, from being a beginner, or which I might consider myself as well a beginner, but very rarely people ask how to make money. It might seem like a taboo question, but yes, if you want, we can discuss how to try to make real money, because as I always say, it's in the market, it's very, very difficult to make money and very, very easy to lose money. So that second bullet point, what made you not come to some of the meetings? Yes, and there you have other commitments, lose interest, market goes down. So why didn't you come for, this is not kind of an angry question or anything like that, but what made you not come to other meetings?
remember because I distinctly remember I was in the city center and I forgot that we had a meeting at 6, and only when I came back at 7 I saw your message later on that there was a meeting. So
Yeah,
I did
good.
not come to the first one meeting. I attended the second one. I did not come to the third one because we had a department event that very day. I think it was towards the end of the term, somewhere in December. Right?
Yes.
So we had a department event that day, and then the next two that come.
How about you, Oliver? I think.
Second question.
What made you not come to some of the meetings? Actually, you've come to many, no?
Yeah.
But what made you not come to some of them?
Because in my master course, I have 10 to 12 class each week, so I have many jobs need to do. So sometimes I cannot attend a meeting because I need to prepare for seminars for tomorrow. Yeah.
Good. Anything about these 2 points? Have you lost interest in the markets or in this because, I don't know, less people came, or you just lost interest in, yes, I mean, these kind of things?
Not really, because in fact I'm looking at markets more because I'm interviewing for a lot of firms. So this particular experience has been a talking point in a lot of interviews.
Very good.
So yeah, I've not lost interest. I've actually increased my interest.
Yeah, interesting to hear that. Cool. Let's carry on. And actually, I mean, this might seem a bit silly, but I think it is quite important because I feel that the better the markets do, the more people tend to come to some of these things. I mean, it would have been interesting to see the attendance last year because, I mean, everything was online. But because everything went up, it would have been interesting to see how many people were in LUUTIS. Because, I mean, or at least for the past 4 years, we've always had more than 300 people in LUUTIS. But this year is around 200. And mainly, I would say mainly because of COVID. I mean, people are just more scared of socializing and all of that. But yeah, good. Thank you for your opinions. Okay, nothing. So first game. Actually, in the one that let me choose. Right. So actually, I've never said what I do. You can actually tell me now how you choose this. But what I always do is I go to my investment app, then I go to Nasdaq, so kind of to an index which has quite volatile stocks. Then I go to components, and then I go to top gainers, and I just choose the first one, which at that moment, since the beginning of the trading day, it's up 12%, in this case Moderna. So chances are that, I mean, the stock is volatile, and chances are that it might go up substantially more in 1 hour than something that might be flat right now. Do you see the point? So
Which app do you use?
it is this one, investing.com. I think it's very good. I mean, I've used some other apps, but I mean, it's very easy to use. So 155.17. Cool. Let's continue. What do we have? Group meeting. So yeah, first game, market update, portfolio performance. I mean, today's meeting. Other groups, portfolio performance, trade ideas, and a financial Kahoot. Right. So we didn't have a meeting 15 days ago. And all this news, I made them, let's say, 15 days ago, but they are very good for today as well. So we start, of course, Russia invades Ukraine. Russia mobilizes for assault on Kiev as its troops storm Ukraine. Very sad news for both Ukrainians, Russians, and the rest of the world, clearly. So this was the day of the invasion, February 25th, after air and missile strikes. I mean, probably we all have read about this. So in terms of markets, Russia's invasion of Ukraine threatens global recovery. Mainly, let's say, price of commodities go up because Russia is and actually Ukraine are big exporters of commodities. As well, inflation goes up, and that means interest rates should go up as well, and that means kind of growth goes down in, let's say, very simple terms. I hope the global economic recovery from coronavirus, at least in the short term. I mean, you never know what might happen in a year's time. Are set to exacerbate high inflation and supply chain bottlenecks. Yes. Tough economic sanctions, US, Europe, UK to Russia. I mean, at the beginning it was just banks, but now it's pretty much everything else. Many international companies are leaving Russia. They don't want to have the reputation of people knowing that they are still in Russia, operating in Russia. Gas prices skyrocketing. Do we have any charts? Global. Okay. Okay, so actually this chart is quite interesting. Percentage change in GDP. So these are minus, so this is 0. So Russia, I mean, this is someone has to show to Vladimir Putin this chart to let him know that, I mean, there are just negative consequences for what they did. Or mainly for what he did and money and his surroundings, because, I mean, the Russian people, I would say most of the Russian people are good people and they are against any conflict or war or invasion. Eurozone as well, not very good news for Europe, UK actually as well. Okay, so dark blue, light blue, and this other blue. But yes, so more in particular for Russia, more impact in next year and in 2 years time rather than this very same year. But yeah, interesting charts. What do we have next? Rattles markets. Yeah, very interesting this. I mean, it was a very, I remember that 25th because it was a very sad day for humanity, but a very interesting day in markets. So here, yes, again, and I mean, this just blew my mind because, I mean, Russian stock index, which is not one of the biggest ones in the world, but it's not a small one, and it went down 45% at the opening. Then it recovered, what? I mean, it ended at 35% down or something like that, 30%. But would you imagine the FTSE 100 or the S&P 500 opening 45% down? I mean, the whole system would collapse completely. And hopefully we will never see something like that. And the interesting thing is that the Russian market, I mean, opened that day, and I don't remember if it kept open for another day, but then it closed, and it's been closed since that day. And it will be interesting to see what happens to the market when it opens again, because it might lose I don't know, it might go below 500, so below these 2 points here, but I don't know. I'm looking forward to that day. And apart from that, we will see later on what the rest of the indices have done. So let's continue. Russia doubles interest rates after sanctions send ruble plunging again. This always happens. The president of a country does something, but the ones that suffer the most are the citizens. And these days, because we live in a globalized world, currencies are or show how citizens can be affected by the decision of a president of a country. And yes, I mean, that sent the ruble plunging, and that means that Russians get poorer. If they want to spend money outside, let's say, if they still are in the country and everything else stays the same, nothing happens to them, but only if everything stays the same. And that doesn't happen because prices of everything go up in Russia in this case, so you have less purchasing power with that very same money that you had the day before. How do you try to tackle that? Okay, yeah, this is the against the US dollar. Actually, this is kind of an inverse, but yes, imagine here in 2000, for $1 you could get, or for, if you are Russian, for 40 rubles, so here you could get $1 more or less here, but now you need 120 rubles to get $1. So you need what, three times more to get the same dollar. And yes, this chart as well, interesting. Central banks interest rates since 2013, and yeah, definitely something wrong has happened to the country with this very steep increase. This actually reminds me to Turkey as well, but anyway. And I think we have something finally. Ukraine war unlikely to deflect Fed from path of interest rate rises. Yeah, very important as well. So what happens with the European Central Bank, UK Central Bank, India's Central Bank, or Feds? So because now growth outlooks are, let's say, worse, they should lower interest rates to make the economy again running again, as they did at the beginning of the pandemic, because interest rates are so low, they just cannot go down more, and there is a big problem for them right now and for the world in general, and is inflation, because if you lower interest rates more, inflation goes even higher, and it is really high right now. So is there any chart in here? No. So a very, very difficult moments for the central banks around the world. But just because inflation is so out of control right now, even though we have a war in the world right now and growth and GDPs will come down, central banks will have to raise interest rates because they cannot keep inflation that high. And that is very bad for stocks. Very, very bad. Right, let's continue. I don't have more news. Anything that you want to discuss? Oil, gas, but I don't know, politics. What do you think might happen with the war? They might reach an agreement tomorrow and things will go back to normal. I mean, the thing is that, I mean, you see some of the pictures and videos of Ukraine and it's just, I mean, you cannot believe it, that in a month, I mean, you can imagine living or being Ukrainian Actually, I was in Spain the weekend of the last meeting 15 days ago, and I was with my mother in the kitchen, kind of looking at the sky, and I was telling her, do you mind if we suddenly see some rockets in the sky and we have to run, I don't know where, and we have to leave everything behind? I mean, that would be just crazy. So that is happening to some people in the world right now, very, very, very unfortunately. So what do you think? I'm going to stop talking for a moment, and it's your chance. So what do you think about Ukraine, about interest rates, about the stocks, about anything that you read? Nothing? Right, let's continue. Market update, very interesting as well. So we have, let's go over all the markets. Yes, can you see? Yes. I mean, we have pretty big losses so far, year to date. So actually, when you see YTD anywhere, it's year to date. So what the asset or index or stock has done since 1st of January this year. Or in other words, current year yield. But most of the times you would see as YTD, which is year to date. So pretty big losses. We have here, okay, this is the euro against the dollar, but indices, the one that has lost the least is the FTSE 100, the UK market, minus 259, which is actually quite impressive. Looking at other indices. And then the one losing the most, Nasdaq 100. Good. So, S&P 500. Actually, it's interesting because we have the all-time highs the 4th of January, and the war started 25th. Markets are so interesting. Who would have thought on 4th of January that we were going to peak, and who would have thought that the day of the invasion, okay, it's here, it's not, but the day before the invasion, the markets, let's say, were down the highest. I mean, it's kind of, the markets are managed by some people that know more or less what's going to happen in the future. Because, I mean, I would say this should have been the 25th of February, so the first day of the invasion, and now we would be down, but no, I mean, 2 months ago more or less, and then the day before the invasion, it's when the markets went down the most. So there we have S&P 500. Now you might be wondering what this line is. This is a simple moving average of a 200-day simple moving average. So what this does is just makes the average or the mean of the, I don't know if it is the opening or closing prices, but doesn't matter, more or less. Let's say the last 200 closing prices of the S&P 500 divided by 200, and you get this moving average, which is very important for people that use technical analysis, and it's also very important as supports and resistances. And right now it's flattening, and it will probably start to come down. So that's a good, let's say, sign of how strong the market is. So Nasdaq and S&P, we can see here that Nasdaq, I mean, we can see in many ways how comparing two markets, which one is stronger or weaker. So one way could be we check these big drops, let's say. So we have the first one is at this point and the second one is lower. This more or less happens the same, but let me show you FTSE 100. We might have something different. Okay, yeah. We have more or less the same, but in a different way. But what you can see to see weakness or in a market is to compare those. If this candlestick is in this more or less position, and then you see another index that is this more down, let's say, so you see that this Nasdaq would be weaker than the S&P 500. So yes, and something else you could see, let me show you, for example, the Spanish IBEX here. This 200 simple moving average is already coming down. That means that this Spanish market is weaker than this one, which is flattening right now, and this one as well. You see my point? So Dow 30, biggest 30 companies in the US by market cap. So again, very similar pattern. And for example here, the moving average is already coming down. So the Dow 30 is weaker than the Nasdaq and the S&P. And as you can see here, this was the peak before COVID. And it's kind of starting to approach here. So we still, or let's say we only have this difference, because if we go to Nasdaq, and we see here, this is before COVID, there is still a lot for the Nasdaq to come down. So that means two things: that the Dow went up less than Nasdaq after COVID, and now the Dow is weaker than the Nasdaq. But anyway, let's continue. So IBEX, yeah, here we can see, I think, very well, because that was the 24th. This is okay. This is 24th of January, 24th. Okay, actually the same day, 1 month apart. That's funny. So 24. Here we have the IBEX, and here we have it a month later. So much weaker than the American markets. We go to German DAX. And actually it's interesting to see the Spanish IBEX, because it never reached pre-COVID levels, or it has not reached pre-COVID levels yet, which were this one. Whereas Nasdaq, as I saw, look at pre-COVID levels here, and it went up, I don't know, a lot more. So there are still markets that haven't been higher than pre-COVID levels. German DAX, very interesting as well, because it has come down lower than pre-COVID levels. Eurostoxx 50, the biggest 50 companies in Europe, as well, weaker than the US market, moving average coming down. French CAC 40, as well, in line with European markets, weaker than US markets. FTSE 100, interestingly as well, for technical analysis traders, it stopped exactly at the highest of the pre-COVID, which is what those traders look for, kind of patterns and similar levels in the past and things like that. The Japanese Nikkei 225, as well, this shows a weaker market, as the moving average has come down, or is coming down for longer, let's say, than other markets. Okay, and these are just stocks. Cool. Oops. Anything that you want to discuss in particular? That you want me to give you my opinion about an index or a stock, or anything or something that you might have seen is in an interesting stock that you might have seen these past days?
I have a question about some of the stocks in the portfolio, but maybe
Yes.
I can ask them later when we talk about the book.
Sure. Yeah, we are, I think, yeah, next slide. Oliver, anything?
No.
Okay. Next slide. Portfolio performance. New stock additions to our portfolio. Actually, this might be a bit old. Portfolio performance right now -3%. Let me show you ex ante. So we are a bit less than 3% down. We have 974k out of 1 million euros. So these are our bond positions. Funnily, this is positive. This might be 106. What is this one? 106. Okay, yeah, fair enough. The commodity bond. So commodity prices have come up quite substantially. So this is an oil company. So everything related to that company, share price and bond prices have come up, and that's why it's our only positive bond position, which is interesting. Because the rest, let's see what the rest are. Okay, Italian bond, Norwegian bond, UK government bond, Portuguese bond, and then you have something that might be kind of very different to the rest, which is John Lewis, which is kind of a small British company. Then E.ON, this is as well a commodities, and this is 6x683. Oops, x683. So it's not doing very well. I mean, we would need to analyze why. I mean, we have doubled the position, but still it would be 5,000k down. But yeah, I mean, interesting. It's always interesting to analyze individual positions. Right. Yeah, let me talk about the bond coupons. So yeah, -3% without the bond coupons. And actually, I have to say something. Did any of you attend the wider virtual fund last week? You did. Anne, Oliver? I think I saw you or not.
Virtual fund meeting.
Last week, or it was online.
Oh yeah.
Yes. Oh, so you both were. Yeah, very good. So actually, I mean, I hope nobody hears this, but I think it was the worst fund meeting I've ever seen, because it was completely unprepared. Jacob didn't even know after. I mean, first I have to say that I don't know why we haven't had fund meetings since the very first week of the second teaching semester. Okay, it took them month and a half. I don't know why. And then Jacob didn't even know the positions of his portfolio. Come on. Anyway, what I want to say about that is that I spoke to Jacob a month ago about bond coupons, because ex ante, as I think I told you maybe a month ago in the fourth meeting, that in the demo account it doesn't do anything with the bond coupons, because you need to get paid those coupons. So I told him, and we kind of agreed, okay, closer to the meeting we speak about this and we add the bond coupons to our overall, to this overall performance, or to this one. Okay, yeah, fine. But then, I mean, we didn't do anything, or he didn't tell me anything, and he didn't do anything with that. But yes, I calculated that we actually, yes, coincidentally today we were paid the last coupon, which was this one, 14th of March, the Norwegian bond, because the rest of the bonds have been paid. And if let's say they are annual bond coupons, we should have been paid now 27,000 euros, which make our portfolio over 1 million euros, which make it just slightly positive, which is very, very impressive. So, I mean, taking into account how the markets have been doing, I mean, it's kind of interesting because the competition started, what? Okay, let's take, the Dow. What, around here? So the competition didn't start from the 1st of January. What I want to say is that even at break even, it wouldn't be that impressive because we didn't start that high, if that makes sense. What is impressively bad, where am I, are these numbers. I mean, the benchmark, I mean, we always need to compare with the benchmark. In this case is the MSCI World Index, which is, I guess it takes the biggest companies. I don't know how it works, but imagine it takes the biggest of the S&P 500, the biggest of the FTSE 100, the biggest of the German DAX, and then it does something, and that is what we are comparing with. So what was I saying? Yes, so that with those bond coupons, we would be positive right now, which is very impressive. And yes, we are winning the competition, fair enough. So now the stock positions. Actually, I forgot to do this, but since the last meeting a month ago, let's say more or less we added these positions, the ones that are blank here. So Mercado Libre, if you remember, British American Tobacco, Johnson & Johnson, PayPal, Coca-Cola, McDonald's, and BBVA. Now, stop losses have been triggered of British American Tobacco and BBVA. So we have here 3, 6, 7. So we should have 5 holdings right now. Yes. So let me show you British American Tobacco. So we bought that company, or I bought that company, because it is classified as a, I probably said this because you were in the amount, yes, because it is a defensive company, so it should do well when markets are a bit turbulent. The problem is that we bought it up here. I probably put the stop loss around 40, no, yeah, I mean it's here. So British American, we 30 British American. No, but this cannot be British. No, I was talking about. No, yeah, British American. Price bought 34. Stop loss 31. That cannot be possible. Has to be like this. Just a second, guys. Let me go to summary, portfolio, margin orders. Yes, can I see here BBVA? No, British American Tobacco. Average price 31. Sell 34. So it's at that price. I don't understand. If we can have. Anyway, I'm going to leave it. The point is that we bought it up here, and I put the stop loss more or less somewhere in here, and it got triggered because it went below those levels. Next, BBVA. I bought BBVA because, I mean, it is a bank, So expectations of interest rates going up, but European markets have done pretty badly. Actually, it's a bit annoying that you cannot see once you, let's say, lose the position or close the position, you cannot see, yeah, this one. You cannot see where actually, yes, we can see it here, I don't know why. And I don't know why in British American Tobacco, maybe it was another chart. Anyway, so I bought it here. I put the stop loss more or less at around 465, and the price went down. Okay, this is 1 week. Let me put it in 1 day. So I bought it here. The price went below that 450 or 449. So stop loss triggered. And those are the two positions that we've lost some money. Then what do we have? Johnson & Johnson, PayPal, Coca-Cola, McDonald's, and Mercado Libre. Right now, let me close this, So we have Johnson & Johnson doing well, quite surprisingly. You're very good, sure, yeah. Coca-Cola, a bit disappointed because Coca-Cola, I've always liked Coca-Cola, and I think it is a very, very good stock, but it's making some losses. And McDonald's more than Coca-Cola, but we still have in profit Mercado Libre and PayPal that we are shorting. These other three we are long. Right, it's your turn. What do you want to discuss?
Regarding McDonald's and Coca-Cola, the day of the fund meeting, I mean that's when I saw that you bought McDonald's and Coca-Cola. I think yes. So and that.
I said something stupid or what?
No. No. So that very day, the news came out that they have closed their stores in Russia. So I just wanted to know if that has impacted the price in any way since then.
Look, I don't know, and I think if we check the charts, we will not see a difference. We will need to see exactly when they announced that they are kind of closing their operations in Russia. But I'm pretty confident that their stock prices did not move regarding that topic. And it is a very, very interesting thing that I've thought about for the past days. And what I think is that markets will not know the impact of closing their operations in Russia. I mean, yeah, Coca-Cola, McDonald's, Apple, all those companies that we've heard, until the next earnings releases of the companies. Because at that moment, we will know if they or if they will get a big hit or not by closing down operations in Russia. But very, very interesting point. But I feel that markets don't know, have no idea right now. I mean, people inside the Coca-Cola, McDonald's, and all those companies know how much impact that will make to their profitability and all those things. But I don't think the market has reacted to those news. Because then as well, I mean, you need to know what's the percentage revenue of Apple in Russia or Coca-Cola or Burger King, or you know what I mean. So, but yeah, very, very interesting point. Thank you for that. What else? Anything else?
Not really, though. I was just regarding the fund meeting, I was just wondering, I think we are the only one who bought a lot of bonds and the rest have not. So I was just wondering why.
Very good. Yeah, I mean, they are very, very important questions, and don't be shy of asking them, because I mean, it's another completely valid question. Why do we have more than half of our portfolio in bonds? Let me see. Yes, or half, more or less, invested in bonds when the other teams have 0% in bonds. So there was, I don't think it was the first one, but the second one, and I think you came to that one, which was in Parkinson, wasn't it?
Yeah.
I think I spoke about being, and actually I said plenty of times in the fund meeting about being conservative. Right. So what's the main difference between bonds and stocks? That bonds will make you less money, but they are less risky investments. So when markets go up, like after COVID, for example, you will make less money, but when markets come down, you will lose less money. And because this is a competition and we are told that we need to invest as much money as possible, how is the best way of being conservative? Because I think the market during the competition will go down, buying bonds, okay? Because even though the bonds will make us lose money, it will be much less than stocks. And then, so that is the main reason. Because we are obliged, let's say, of invest money, so we cannot have it in cash, which would be another very, very good way of not losing money, is by investing in bonds. It took me a while to find these bonds because ex-ante won't allow you to purchase, for example, bonds with less than 100,000 or a position of less than 100,000. I actually have it here. It is difficult to find bonds that the minimum trade is 10,000 euros or less, because what I wanted to do is to more or less split half of the portfolio, as I probably said in that meeting, let's say in 10 bonds, half of the portfolio. So let's say 50,000 each bond for a total of 500,000. So it's difficult to find positions or bond positions in ex-ante that would allow you to buy, let's say, less than 50,000. So I found more or less these ones, which were of a good variety of, let's say, location, rating, currency, coupon, yield to maturity, and all, which are very good things to, if you want for me to explain. And so those are the main reasons. Yeah, bond prices above 100. Yeah, I mean, we can discuss these things if you want with a fun competition as well, so I can kind of show you as well what bond coupons are. Yes, except that one, which I probably spent, I don't know, 2-3 hours trying to look in bonds, and I was like, okay, I mean, I'm just going to invest 93,000, which was the minimum in one of them. So mainly that we invest in bonds because we have, because we have to invest. We invest in bonds because I think that it won't be a good year for the markets in general. So those instruments or assets will be the ones that will make us lose the least amount of money. And then in terms of the stocks as well, we've had some pretty, let's say, how do you say? Anyway, so here, for example, we are investing mainly in defensive stocks, which are again the ones that in rising markets are the ones that go up the least, but in downward markets are the ones that will go down the least or even do well. So that's the main reason. If I thought that markets would go up during this competition. So this would be different. I would have maybe 200k in bonds, but probably the rest without having any cash in very speculative, let's say, yes, that was the word that didn't come up, speculative stocks, which are the kind of, in racing markets, the ones that will go up the most. And something that I probably said, I mean, having cash in volatile markets or in markets right now is very, very important, because it gives you that cushion of buying more when it gives you the opportunity to enter the market at lower levels. I think that would be a good explanation of why it is very important to have cash in your portfolio in these moments. If you think that markets are going to go up and you are really convinced about that, you should not have cash, or maybe a little bit. But if you think that markets will go down and you need to invest, you need to invest in the least risky investments and have always plenty of cash. And that would be what, 20, 30, 40% of your portfolio in cash, because again, it allows you to be the clever one when everyone is losing a lot of money. It gives you the opportunity to enter the market at much lower levels. And something as well that you might be wondering or not is why do you have coupons in your portfolio? If, for example, or another reason that why you could have bonds in your portfolio. So for example, let's move here. You think after, let's start more or less 2009, lowest level, you are more or less, or let's say around this peak, in between 3-4 years, so in this time period, you've made quite a bit of money in the market, or I mean, at least you think you've made a good amount of money. So in stocks, so you want to sell the stocks, but what happens with that? That governments come and they tell you, yes, you were a very good trader and you've made a lot of money, but if you sell, some of that money is for us. And you as an investor, you tell your government, no, let's see who's more clever. So one of the things that you can do is, without selling those stocks, or I mean, I'm sure there are ways, but for example, in funds or investment funds, without selling those positions that are with big gains, or not, you don't have to have big gains, with gains, you move that money to something much more conservative, because you think that it's been a good number of years that we've had a rising market, so you think, okay, it's been enough, and actually I have a slide later on, it's been enough, I just want to keep those savings. So you move that money with gains from stocks to bonds, to another or to other investment funds, but of bonds, and doing so, you don't have to pay that tax, let's say, because you are not selling those gains. Okay, so that's another important way of why you might want to have not just bonds, but again, could be funds of cash or something very, very conservative. Because you've made some gains, you don't want to pay taxes. I mean, this is totally legal. I'm not talking about anything dodgy or anything like that. So instead of, you might think, but if it is £100, I prefer to sell everything and I have that cash or that liquidity. But if it is instead of 100, if you need to pay 50,000 to the government, you would say, I don't want to pay 50k to the government. I want to keep that money somewhere else, because then waiting 2-3 years for the market to come down again, you might think, okay, these levels are now much more interesting to go back to stocks. So you move back that money again to stocks. You haven't paid any tax, and you again have that same money, but at much lower levels. Okay, cool. Let's continue. Right, we could go each 5 pass, so I'm not going to go for the individual. Actually, I have the pictures because I thought that was going to be a small. I have the pictures. But as Jacob said, and I mean something it makes me a bit angry that, yes, the other fund manager, Ted, he said that he couldn't attend because he was working. I mean, you've been a month and a half without making a meeting. It's fine if you have to work or if you have a job that won't allow you to come to the meetings, but let LUUTIS or Dan or the president know that you cannot make it, and Dan will put there someone else. But know that after a month and a half that you don't do anything, and then you say that, no, I couldn't attend because I have to work. I mean, it was shocking. I mean, I didn't want to say anything, obviously, because, I mean, I don't have any power. I mean, I know Dan very, very well, mainly because we were together last year in the same group as portfolio managers. But, I mean, I just don't want to say anything. So, as Jacob said, they are only down 3.7%, but they are only invested kind of like, I don't think they are invested more than, what, let's say 200k, which is not what we were told to do. I mean, we were told to be invested, I don't know, 700k, 800k all the time. So as he said, we wouldn't, or we shouldn't take into account their group, which is quite sad as well, because, I mean, the fund managers should be the ones that have the most knowledge and the best ones, and the ones that should teach us the most, but not this year. I mean, clearly this year, the fund managers are or the other 3 years were much better than this year. Although Jacob was last year as well. And who was the other fund manager last year? I don't remember now, but he was good, I remember. Right, let's carry on with William. 35% down, so positions of William. What do we have here? HSBC. Look, a bank. Very interesting, because, and even more interesting, that a British bank is doing, let's say, very well compared to JP Morgan, and I saw some other banks there, Bank of America, and that are not doing well at all. And we have here some pretty big losses. Now I see this, and there is a slide now after we see all the groups, that there are here some red flags that I just run away from a portfolio like this, that you must stick. And I see these losses of 45, 48, 47, 55, 61%. I mean, that goes against all possible investment, analysis, or goes against everything. And I will explain later why. But what do we have here? Palantir. People are still trying to make money in Palantir. Okay, Zoom, ExxonMobil, very interesting, this one. I think this one is a commodities company. But yeah, Netflix, MicroStrategy, and then some cryptocurrency positions. Let's move on to Connor 42. what do we have here? AMD. Oops. No, I lost it. AMD, Argo, I don't know. Bank of America, again, interesting, making some losses. And HSBC, positive. That's very good. Alphabet, Google, Microsoft, Netflix, again, Spotify. T-Mobile, interesting. This is, how are they called? Telecom, anyway. Volkswagen and Waste Management. Yeah, interesting position, that Waste Management. And some cryptocurrency. I mean, do you see more or less well everything? Yeah, good. I mean, if you have any question or something you want to ask, anything, just let me know. And Archie, 21% down. So Archie has plenty of positions. And let's go to the positive ones. Canadian Natural Resources, again, commodities company. I was thinking about buying BP a couple of months ago, and I should have done it, but I mean, it's one of those things that that many times you say, I should have done this and I didn't do it, but because BP is, and pretty much every commodity company is doing very well right now. Goldman Sachs, again, something that maybe Goldman Sachs, no, but Bank of America, you should think that they should do well in a raising interest rates environment that are going to happen in the near future. But when everything goes down, even companies that should do well and at those moments go down in less proportion. I mean, as we can see here, not Bank of America, but we would need to see, yes, actually, this is why. We have 11% of the... So this is probably doing better than other stocks, but because they have such a big position, they are taking a big loss. They're actually 8% down. We have it here, profit and loss percentage. And what else? Positive, Unilever, interesting, yeah, good one. Glencore, another commodity company. Johnson & Johnson, MasterCard, and I saw that British American Tobacco, they have it positive here. And actually 20%, that's very impressive. We don't know here at what level they bought the stock, but yeah, very, very well done to Archie, because we lost money in British American Tobacco, but he's making money there. Wells Fargo as well. But yeah, again, very big positions here. Right, so I think the next slide is quite interesting. Some red flags that I can see from other groups, and I have here: never have a large proportion of your portfolio on a single stock. Always diversify. Always use stop losses. And this is because if your portfolio declines by 25%, you need a 33% gain to go back to the starting point. If your portfolio declines by 50%, you need to make a 100% gain to go back to the starting point. So not only to make money, just to go back to where you started. So it's not that you lose 50% and you make 50% to go back to your original capital. You need to make double. And if you go below this starts to get quite scary. You need a lot more to gain to go back to normal, let's say. So these positions, some of these, I mean, and the thing is that it's very interesting to me, I mean, and that's why as well, why I asked you at the beginning why you came here and all of those things, because when there is a feeling that it's very easy to make money there is so many people coming into the market, and you can see so many videos on YouTube and everywhere about people making money, and yes, you need to invest here, 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 because you will make this, this, and this, and Bitcoin will go to $1 million dollars a Bitcoin and all of that. But as I've always said, that's not the reality. That's definitely not the reality of the markets. And if you've been in the market, or let's say if you haven't suffered, let's say the 2008 financial crisis, you really don't know what the market can make you. And it's interesting to see as well, for example, if we take the Nasdaq 100. So we see it here. Okay, it's come down quite a bit, but this is dangerous as well, because I think it is more than 50% of the Nasdaq 100 companies are down more than 50%, which is nothing to do with this. And this is because Apple, Microsoft, Meta, or Facebook, Alphabet, Google, those companies make such a big percentage of the index, and those companies haven't come down that much. So you have to be very careful with saying, Nasdaq 100 has come down 20%, because you need to go to the individual names, which are kind of these ones. I mean, Netflix, for example, 40%, or Palantir, or Zoom, these names. I mean, you have to be really, really, really careful. And again, always stop losses. And I have here a good, let's say, way of acting. So for a 1 million euros or pounds portfolio, you cannot lose more than 10,000 euros for each position. And that means, yes, I have it here, stop loss max 20% down. Yes, because you don't want to lose more than, we don't want to lose more than 1% of total capital on each trade. Actually, it's quite small, sorry about that. Do you understand that? So we cannot go first. We cannot, yes. Okay. So we have here, yes, you need to start. You cannot start from here. You need to start from this 1% total capital, and then you move up. So because you don't want to lose more than 1% of total capital on each trade, and that is 10,000 euros. Right. So then, depending on how much you are going to invest, I said, okay, 50K. So you don't want to lose more than 20% on each trade. And there is where you put your stop loss. So you buy a stock at 152, and you do that famous formula that I always tell you, final price divided by original price. So you kind of look for a 20% down or below your buying price, and you put there the stop loss. And you know that you will never lose more than 20% in that particular stock or trade. You will never lose more than 10,000 euros in that particular trade, and you will never lose more than 1% of your total capital for each wrong trade that you made. Okay. Let's continue. Yes, and I think, oh yeah, very important. As a good friend used to tell me, Gonçal, keep it simple and you'll win. And when we mean simple, we mean a reasonable number of bonds in your portfolio, a reasonable number of stocks in your portfolio. In my opinion, Archie has way too many stock positions. Yeah, I mean, in the investment world, I think it's very important to keep it simple. And if you want more about that, I mean, just come at the end. And be happy with modest returns, very important as well. If you think you can make double-digit gains every year, you'll almost certainly end up with the losses that we saw. And by modest returns, I mean, for example, be happy with a 1-2% return in bonds in your portfolio, in your bond holdings a year. Be happy with between 6 and 10%, or between 5 and 10% in your stocks holdings. So when you start thinking above that, you're being very optimistic, and the market will put you in the right place. Because remember, the market is a zero-sum game, and you are, let's say, playing against professionals that know a lot more about you. I mean, not you too, but much more than me, if you see my point. Right, it's 20 past, you've seen this. I did this for the meeting 15 days ago, adding the Coca-Cola, BBVA, McDonald's, and all of those, but I mean, this is no longer applicable. So let's do your 2 stock pitches, and yeah, and then the Kahoot, and that's it. Right, so Schroeder's pitch of Johnson & Johnson. Actually, I can make it bigger, this one. Okay, it's bigger there, but okay, not bigger for me, but that's fine. I don't know which one is recording. Anyway, it's fine. So, all yours. Tell us a bit about Johnson & Johnson.
I have not seen since I made this presentation. I have not made any.
Don't worry, it's fine. I mean,
Basically, Johnson and Johnson is a pharmaceutical company, and currently has been in the news regarding the production of COVID vaccines, and that is like it's not the main area in which it operates, but yeah, it has been in the news regarding that. Recent news, there was some controversy about its one of its subsidiaries regarding, I think, I don't really remember now, but regarding the talcum powder, the production of talcum powder, and
because there were some cancer cases, isn't it?
yeah, there was some litigation regarding that. So it made whatever the part which produces the powder thing, they made it a subsidiary, and they've declared bankruptcy for that. And whatever it was involved in, the judge ruled in favor of Johnson & Johnson, and it is allowing them to go, like that subsidiary to go back.
Yeah, actually, that's, I mean, very interesting about how a company can make something that apparently they made wrong, not kind of make the company worse by doing and spending a lot of money, lawyers and all of that, by making that particular part kind of not ruin the company. Yeah, carry on.
Yeah. So that was recently that it has been in the news for that. Then the financial, I mean the statistics and the ratios, different ratios. I mean on the day I made the presentation, those were the like the market cap and the average volume.
Very good. I don't know why. Okay. Yeah, that beta. Yeah, sorry about that. Yeah, carry on. Anything, any particular ratio that you want to highlight or anything?
Mainly I was looking at the
Okay.
Is
0.71.
0.71. I mean, the rest I just mentioned, just because it was required. But yeah.
Now, this beta is the volatility with respect to the market, isn't it?
Yeah.
Okay, which is actually interesting because, and I mean, I made some notes at the end about the presentation, but I didn't mention anything about this because I don't think you write the beta with the financial ratios, because the beta is more about the investment part with that alpha, and you know what I mean? I mean, the financial ratios are about earnings and cash flows and all of that, and beta is just how volatile is the stock with respect to its benchmark or where the company is in which market. But yeah, good.
The reason I mentioned it, first of all, it was mentioned along with everything like I was looking at Yahoo, so it was mentioned. But the reason why I specifically mentioned the beta was because sort of to find some reasoning behind your decision to buy it. So that is why I essentially mentioned it.
Yeah, because actually it's very, as a defensive stock, is very good that it has a smaller than 1 beta. And that means that it is less volatile than, imagine, the Dow 30, if it is in the Dow 30, which I think it is, yes. Which is very good because, I mean, the Dow 30 is kind of the least volatile of the US markets, I would say. So it is even less volatile than the Dow 30, so yeah, very good. Next slide, or? Yeah, you can read it, don't worry, take your time.
Yeah, so basically talking about the trends, when I was looking at the stock of the past stock prices, I didn't really, I mean, it's not decreasing, but it is not a typically increasing trend either if you just look at 1 year or less than 1 year. But when I looked at 2 years and then at 5 years, then you could see sort of like an increasing trend, which was, I mean, it is more typical and more visible.
I mean, clear here, we don't have a trend. Yeah. I mean, I think it's flat, but here.
Yeah, so that's why
we have a
2 years, and I included this particular graph for 2 years.
Mm-hmm.
And then, yeah, so analyst coverage, I looked at that, and from Wall Street Journal, and I saw that the general consensus was that the stock is overweight, which essentially means, from what I saw, which essentially means that it can perform better in the future. Expected to perform better in the future, or it has the potential to perform better in the future. So although a lot of analysts said that to hold the stock, which is to neither buy nor sell, but yeah, the overall consensus seemed overweight, which maybe because it is, as you said, a defensive stock, and at the time of the ratings, maybe like this was current and this was in February. So because maybe they projected that the markets will go down. I mean, this was at a time when there was a lot of uncertainty. Russia, I don't think, had invaded. I'm not sure.
Not yet, no.
Yeah, so it hadn't been invaded by that time. So yeah, so I think that's one of the reasons why you may have.
Yeah, I mean, at the end of the day, I mean, I said a month ago that you have to be very picky and very careful with analyst ratings because, I mean, I guess before the financial crisis, before the 2000 bubble, before the COVID pandemic, probably most of the analysts were very positive in the overall market. So you would see probably many more buys than sells in these things. But then, if you would have done as what the analysts said, you would have lost money. But at the same time, who moves the market? Investors. And what do investors do? Mainly, or markets move mainly by the big asset managers and big pension funds and all of those. And those asset managers or pension funds are run, let's say, by fund managers that have teams of analysts that would tell them you have to buy this because this. So this is kind of real data. I hope that really, if they mean buy, it's because their target prices are above the current prices. So you have those two sides. But yes, I mean, you should believe in these things. Next slide.
Yeah, so the day you had bought was 14th, right? And so the previous close, so the price was below the previous close and was less than the opening price, which is indicated by the candle. And it had been declining for a few days. And keeping in mind, I mean, one of the reasons, as like the previous slide said, the analyst rating indicated that it may perform better in the future. So, I mean, there may have been an expectation for the price to rise. Plus, I think in the next slide, yeah. So, there was a previous decline before this trend. There was a previous decline, and then it recovered slightly. So, I may have looked at the past trend as well, maybe. Yeah, so the low which we had was on the 24th of February, like a sudden drop in price, which was due to the Russia-Ukraine conflict. And also this, and there may also be expectations for the price to recover or to rise because many countries are now vaccinating their children. And even though the Omicron threat has sort of abated, which is, yeah, I'll come to that later, but still, a lot of children programs have started in many countries. But the situation may reverse mostly because of the Russia-Ukraine conflict, where we don't know what exactly is going to happen. There is a lot of uncertainty. And even though the beta is 0.71, which is a defensive indication that it is a defensive stock, so it may not decline.
Or more defensive than the market.
Yeah.
Okay.
Yeah. I mean, not exactly, but yeah. I mean, it is.
Because you might have a beta of a stock below 1, but if the stock is a biotechnology company, it might still be really volatile.
Yeah, I mean, it is still above 0.5. So it's not greater than 1, but any fluctuations will still impact the price. And lastly, the threat of Omicron has abated a lot, and so this may, it has the potential to sort of impact. Now, of course, this is like 3 weeks ago, so a lot of things have changed since then. So there may be additional factors now.
That was great. Very well done. So yeah, very good introduction to the company, recent news that might benefit the stock, financial ratios, stock performance over the last year and over the last 2 years, and comment on this. Conclusion explaining reasons for the stock to go up, together with explanation as to why the trade might not move the way we wanted. Kind of this last very point. Very good. Now, you might want to know why I bought the stock. There isn't a big reason rather than keep it simple, and it is a defensive stock. It is a pharmaceutical that has done well in the past. It's kind of not it doesn't, let's say, trade in those more volatile pharmaceutical areas such as biotechnology and things like that. So yeah, I cannot tell you much as to why I bought it. I mean, it was more as an exercise for you. But yeah, very very good. Um, yeah, I might add here. Maybe it's good if you add the year of the ratios. But yeah, very good. And then I've never featured, let's say, in these meetings or in my presentations. Yeah, we are living. Sorry, guys. In my presentations, financial ratios, because as well as like with analyst ratings, you have to be very picky with this. And actually, something that I wanted to tell you is ratios are always better compared to competitors rather than just the ratios alone, because at the end of the day, if you want to have in your portfolio pharmaceuticals, you should buy the best or the very best pharmaceuticals. So you do that by comparing different pharmaceuticals. But again, in terms of financial ratios or the financial statements, I would stick to positive net incomes, to positive dividend growth, because in my opinion it's kind of let's say not conservative but normal price to earnings ratios, earnings per share, so that they are not something like probably what Tesla is, or I mean with some crazy ratios. But you always be very very careful with this, because first, I'm not an expert, so I feel that I'm not in a position of telling you, okay, you should focus more on this, this, and this, because are more important than these others. Because, yeah, dividend yield, check that it's been growing. It's a very, very good sign that it has not stopped paying dividend for the past 10 years. Is as well very important. But yeah, be always wary of financial ratios. Cool, very, very good strategy. I mean, that's exactly what I wanted you to do. Now, Oliver, your turn. Which is funny because I told you to explain why I shorted the stock, and you made a pitch to buy the stock, but that's absolutely fine. So, tell us what you have here, which I just copy pasted, and I think I made some corrections, but yes, tell us what you have here, or why you think we should buy PayPal. Well, I mean, you can read it and you can make some points to get to that first point and the second point, and then there is another one. Yes. Or, okay, in that first point, you say that, okay, the stock has been declining for the past 6 months, but this week, and that was kind of 15 days ago, recovers slightly according to the 2021 information compared to with other competitors. The distribution of the organization from the listed peers, PayPal is the market leader in the financial transaction services. So yes, Shreya, something, for example, very good. I like this. Market leader in whatever market. Could be beverage, could be, yes, pharmaceuticals, could be banks. Market share, very good as well. So yeah, those are kind of the things that we are looking for. Okay, PayPal and Square compare profitability margins. Okay, healthy margins and growing margins, good. Net revenue. Okay, good. Let's tell me if you want to say anything, Oliver, about the recent news in the last month. Viral investors, Skipify. I didn't know this, which is a leader in frictionless e-commerce, I guess, that enables instant checkout on merchant website and marketing channels. Yeah, actually, very, very important. And that's, I mean, I've read and heard that, and we finish, guys, that it's very important to differentiate. I mean, apparently I still don't understand, but it's very important to differentiate Bitcoin, for example, in one hand, and Ethereum and Solana, I think they are, which are kind of the blockchain cryptocurrencies, because apparently they will make yes, kind of financial transactions in the future much easier and cheaper, and it is the technology behind those things. So yeah, good. I mean, this is the kind of thing, Oliver, that I was looking for. So, oh yes, I have a slide for you as well. Very good, Oliver. Well done. Stock price trend for past 6 months and past week. Very good. Competitors, past earnings and earnings surprises, and recent news. Very good. Now, finally, let's do. I think it's always good to do the Kahoot. So actually, let's check the how markets are doing. So mine. Oh, it's pretty much exactly the Nasdaq and modern everything exactly pretty much the same. No, I'm gonna be the worst one by far. It's come down what 7% or so. Terrible. 140.72. I have a calculator if you want to make it quicker. And it's not as much as 7, but it's minus 4%. Which is terrible. Horribly terrible. Cool. Macron is getting weaker and weaker. Let's see what happens with those big companies. Right, so you got both prices Australia the last time. Are you gonna be again on that? Good. And the thing is that, I mean, at the end of the day, these kind of meetings are just to do this kind of games, which you don't do at university with other people, let's say. So, okay, not bad. Not bad. Let's see, Oliver, are you positive or negative?
Okay.
By how much?
10%.
Who do you choose?
No.
Apple? No. And yeah, no, that's gonna be I think better than Australia. Actually, what share price of Apple is that? Because it's not the normal one, let's say. Okay, Canadian dollar. Because I mean the current US dollar price is 150 something like that, but that's fine. So what's the difference? So 23.05 divided by 23.09, and that's 0.17. Yes, Oliver, you beat her. Cool. So you choose one of them, and let's go for the Kahoot. So yes, actually those things, Oliver, I mean, that's kind of interesting because probably what happened to me with British American Tobacco, that it was indeed that which I did modify. I'm going to put it back, but it wasn't the one that I had in that chart. So you always make sure that you have the right ticker, always make sure that you have the right currency, always make sure that you are in the right market, because Johnson and Johnson might be as well in the German DAX, something like that. You know what I mean? So stocks, British American Tobacco. This was 34 and 31. Cool. Oliver, please help yourself with one of them. Cool. So finally, I'm very sorry for being this late. I hope it was a good experience and a good time. I mean, as I always say, I always like these meetings a lot, so I hope that you also like them very much. My Kahoots, see all. This is today's one. Let's start. Continue. What's this? Classic mode. Loading game pin. There you have it. There is no music, no. Cool. Okay, my phone is there. Sorry. Keep this. Right, ready? Oliver, oh yes. Cool. So, actually the Kahoot is gonna be very similar to last meeting's one, which you both were. So, this is tricky. It's not easy. Not big differences. Very good. Oh, that was impressive. Maybe because it was the lowest one. Oliver, a bit quicker than Shreya. Now, Nasdaq 100. This might be a bit easier. Just because there are bigger differences between the answers. Except the green one. Not the lowest one, again. 13,000. It was at 15th. Actually, the highest. Don't remember if it was around 16,000. Who got that? Oh no, yeah, none of you. Next one. FTSE 100. Let's see what the answers are. Oh, this one is tricky. Yeah, the red one. I was in between the red and the yellow one. Oh, none of you again. Fourth. Okay, interest rates around the world are likely to, in the near future, some of the questions are the same as the last time. Very good, I like that. And you were quick. Oh, only by 2 points. Higher interest rates, the cost of borrowing for companies. So if higher interest rates are, yeah, I'm not going to say anything. Very good. Very, very good. I mean, for companies, individuals, and everyone. So if I want to take a loan for anything, and if interest rates are higher, I will have to pay for a higher interest when I have to pay the money back. Very good. If interest rates increase the appeal of companies' profits, it is a very, I mean, I repeated these questions because they are really, really important, and more for the coming months and years, when in my opinion interest rates are going to be higher than what they have been for the past 10 years, or let's say after the financial crisis. 1 second. Okay, so if interest rates increase, the appeal of companies' profits decrease. So as we said in the last meeting, profits depend on a base interest rates. Okay, so the higher that interest rate, the less appealing, let's say, the company's profits are, so the lower the share price will be. Because, I mean, there are many reasons, but one of the main ones is that because interest rates are higher, the interest rates that bonds, for example, pay will be higher. So it will be, for me, more interesting as an investor to buy a bond which is or has less risk but higher interest rate than a stock that is more risky and that the yield of that stock will be lower. Okay. The index that has dropped the most year to date is, this one should be easy if you were paying attention. Oliver, yes, Nasdaq 100. We have it here at the moment 20%, which is a substantial drop. The index that has dropped the least year to date is, this one as well should be easy if you were paying attention. Yeah, very good. Who got that right? Yes, Oliver. Sorry, Shreya. Yes, we said here, FTSE 100 only, and very impressively, 2.5% down. Oh, it's gonna be tricky for you, Oliver. Russian stock market plummeted by how much the day of the invasion? I mean, this is just unbelievable. 45%. Yeah, not 35. Yeah, you are on fire. Look at this. Oh no, finally, no, we have two more. The Russian market is still closed as of 14th of March 2022. Is this true or false? Again, I said this very clearly during the meeting because I cannot wait to see the day it opens again. Who hasn't answered? This one is easy. 50%. True or false? You'll be right. One of you haven't answered. Good, very good. True. And finally, as always, the percentage change in an asset is calculated. Okay, there you have the possible answers. So think about what you did. Yeah, very good. So always current price in the numerator, or you write the current price or the latest price first. So we don't have third place. Oliver, second place. And the winner, again, it was you, Shreya. So congratulations, and please feel free. And last slide, end of the session and of the group meetings. Thank you very much for coming to this final meeting. You can message me at any moment on Facebook or WhatsApp. You can talk to me now if you want. Wider fund meetings, though, will continue to take place. And apparently there are still quite a few of them, which it's fine. And I mean, something that I really didn't like about the wider fund meetings is that they've been online. And I don't know, but I just don't like online meetings. I just prefer to be in person. So yes, this was last week. Today is this day. So we have another fund meeting next week. Then the Easter break starts this Friday. Okay, so we have another fund meeting here And then another fun meeting, apparently the final one the week after we come back from Easter. So we still have 3 more. I mean, I will, of course, I won't make any big difference to the portfolio unless big things happen in the stock markets. But yes, I mean, you will see me in all those meetings, and of course feel free to attend, and I hope you can learn much more of what you did or of what we did in last week's one, which was pretty shocking. And yeah, all the best in the final part of semester. So thank you very much for coming, guys.